Welcome back to Reimagine version 11, our virtual conference series, bringing you nothing but the best projects, bright minds, and leaders in the space, with the focus on what's up next. My name is Miguel Vazquez, and next up we have Red from Harvest Finance. Harvest Finance is a yield farm aggregator, and as some of the viewers may remember, they were in the news at this time last year, but we'll get into that. Maybe you could describe what exactly is a yield farm in general, and then a yield farm aggregator, and why that's exciting in the DeFi space and DeFi in general.
Sure. Yield farming, from very simple standpoint, is basically providing liquidity to projects who may need your funds to help it run, and in return, they give you reward tokens for leaving your funds there. So like a decentralized exchange, it needs pools of various different types of currencies, so it can perform swaps because, like a bank, they have a centralized person kind of sitting behind a window. Well, in DeFi, these are actually just code on the internet, smart contracts that are holding the money, and they permissionlessly swap these funds to traders like you and me, right? So again, it needs everyday people, depositors coming in, leaving their liquidity there to help their operations. In return, you get this reward token that you can either hold on to because you think it's going to appreciate as the project becomes more popular, or you can just sit there and flip it for a profit and, grow your cash pile from there. In yield farming, generally the returns, the percentages are displayed in an APY, which is a compounding rate, versus APR, which is earning like on a static rate. You deposit 5,000, you're always earning on that 5,000, whereas APY is you deposit 5,000, the profit you eventually earn in reward tokens is sold, piled back into that 5,000 to make it 5,500, and now you're earning on 5,500. So your earning power actually is exponentially greater in APY. And that's almost like in DeFi, it's like a little deceptive because you have to go through this process of, like, as I was mentioning before, you can't hold those reward tokens. You would have to go and sell them, compound your balance redeposit to achieve the percentage they're advertising to you for their yield farm. What Harvest Finance does specifically is actually automates the process for you, so you can actually achieve that APY. It does the compounding effect for you, kind of cuts out that decision to say, hey, we're not holding on to this gobbledygook token that you're earning. We're going to sell it, turn it to instant cash, redeposit it for you, and now your earning power is actually exponential in that APY curve. And in addition to that, like if you're farming on Ethereum today, for instance, the network cost can be very high on Ethereum just because of popularity and NFTs and all that stuff. So by joining like a yield aggregator like Harvest Finance, you're almost like carpooling. Everybody's depositing in say one of the 140 different strategies we have Harvest. You're depositing in one of them with 1,000 other people, and instead of you individually compounding and paying the $500 cost it made to compound just once, that $500 cost is now shared amongst those 1,000 people. So now you're paying like 50 cents or whatever it is, right? So just efficiency and automation, but just ultimately for the very newbie, it's like high-powered savings account almost, or like yield return accounts, right? Instead of we're earning only 0.75% or maybe like 1% on some high earning CD at a fiat bank, like some of the lowest strategies at Harvest are basically like 5%, right? So 5 times, all the way up to maybe like 150 times, depending if you want to get on some of those degen little higher risk vaults that are out there. But still, majority of all the vaults at Harvest offers, we kind of look through the code, make sure you can't really get attacked or there's not any of these vulnerabilities or things that can happen that you're seeing in the DeFi world today. We try to vet those a little bit. We can't guarantee safety. This is all kind of very cutting edge stuff that people can come up with all kinds of crazy ways to scam you out of your money, right? But like Harvest tries to, as its service, say, hey, we've looked through all these contracts. We've made sure there's no like exit code that then people can just straight up pull your money out, and we feel pretty confident that you can farm here with relative security. That doesn't mean that specific token you're farming isn't going to plummet to zero because whatever something goofy happens, but we try to maintain the security of your funds in terms of it being in the vault and it being withdrawable at any time.
Yeah, I guess that's really the first thing that I think scares people away is seeing a large, because when you get onto some of these yield farms, you see a large list of really exciting numbers in that APY space. But then you
Hmm.
take a look to the left, and while there might be some, oh, I see, there's ETH right there, but then it's got like a weird, like a Y in front of it, or a B, or a,
Yep.
HNH. Can you explain a little bit about what those are, and I guess the dumb down the technical aspect of some of those things when it comes to, I guess, for lack of a better phrase, wrapping some of these assets?
Yeah. So yeah, wrapping is a great term. A derivative is another term that you can kind of use. But like ultimately, yeah, you take ETH for example, and they may want you to deposit it into their ecosystem. And what they'll do is they'll give you like almost like a voucher back called YETH. Because maybe their project's called yellow.finance or whatever it is, right? So they kick you back YETH. And now they say, okay, now take that YETH and go deposit that in combination with some Ethereum into this liquidity pool. So now people can actually trade back and forth with YETH without even having to deposit Ethereum into our ecosystem, right? So it's like almost like an extra step to branch out that ecosystem without users ever needing to actually directly like jump into it. Like, right, you just want to be able to buy the token, but I don't ever want to mess with Yellow Finance itself. But I think maybe the token of Yellow Finance might go up. But that adds these layers of like complexity and risk. And without getting like too technical, if you jump into those liquidity pools and Y token suddenly plummets, you may be suddenly holding a whole bunch of worthless Y tokens while everybody's taking ETH, panic exiting out of that pool because they saw yellow token had crashed or whatever it is, right? So there's just some of these nuances that they need to give these 10,000, 100,000% to attract liquidity into these pools because the risk degree is so high into these, right? It can be very profitable, but it can be very negative as well, right? I equate this almost to like the American Wild West and the gold rush, right? Like, yeah, there's a lot of gold in them hills, right? But there's a lot of scams. You can get attacked and killed. Like, there's just a lot of stuff going on. You just have to be extremely careful and not be deceived by these 100,000%. You got to understand, okay, why is this 100,000 happening?
Sure, yeah, and I live out west. I know it's kind of hard to tell, but back in that period, when you would take, let's say you wanted to go take your gold and go deposit it over at First National Bank or whatever, they'd give you an IOU, kind of like a bank bond, and say, hey, here's all. Well, if you come back, a month later and they've all been robbed, yeah, your bond's worthless. So I guess that's kind of a similarity there between the what we're kind of seeing. So it is kind of that up and coming early type interesting because people were making a lot of money back then too. So
Yeah, it's just, you just have to be very careful because I think a lot of people are prone just to chase that number and
yeah,
they don't really understand what they're getting because ultimately too that APY is saying you're getting 100,000% not in dollar amount per se, you're getting 100,000% more of that token. But if that token plummets, right, and outpaces what you're earning, people just don't understand that concept, right? So there is just a little bit of understanding and do your own research, and that's why like a service like Harvest is very important because we don't offer those kind of gimmicky type pools, right? Because we understand users kind of get affected by it. I think early in our days we kind of did, and we even tried to put little flags on it and said, hey, this is degenerate. You can actually lose fiat even though while you're gaining an LP position. It's just the craziness of the vaults and just so many complaints flooded coming in saying, we just don't understand what's going on. And we took a step back and we said, okay, we have to redefine how we're advertising these APYs and how these vaults are operating and making sure we're trying to offer like this lossless environment, right? Like, I'm not saying there's no loss or no risk
yeah,
here, right? I say that and just that the vaults that we roll out, we almost want to be like dummy proof in a sense, right?
sure, yeah, no loss like on the platform or for technical reasons. I guess
Exactly.
I guess, and always important to understand those layers of the derivative when you're getting into that, because yeah, you're adding exponential levels of risk too. I guess the next question that kind of flows from that is, instead of those derivative assets, I guess also these yield farms have sometimes not just their own token that they're using to go ahead. I believe it's farm on harvest. Also, sometimes they have another derivative token. I think I saw grain on harvest. Maybe I've seen like cake and they have like syrup and there's a donut. I'm not entirely sure. Can you get into some what are those derivative tokens? Not necessarily derivatives of an asset, but derivatives of the platform. What are those doing specifically, grain and harvest, and then maybe a little bit wider view?
Sure. Well, I mean, in general, those derivatives are generally just like the reward tokens of the platform that I mentioned before, right? So, there need to be a way to incentivize people to deposit liquidity and kind of take on that little bit of risk of, putting your money with some platform you may not know anything about, or who are these guys, or it's a new startup, right? So a lot of those rewards are actually programmatically built into the code. Like when the project's launching, they say, okay, here's our offering. We're only going to have like 100 million of our token. We project these to be worth, like 10 cents a piece or whatever it is as we kick off. So we're going to start issuing these at, 100% APY up to the first like 3 million of deposits or whatever it is, right? And so generally that's what those like syrup or cake or whatever these tokens that you see are just kind of like their reward incentive token. Each token is kind of different though, because some of those tokens, they may not do anything other than just, here's some tokens that we're going to give you, and the valuation is kind of like the free random market, right? Like so, and unfortunately, like crypto across the board is kind of plagued by that. There's tokens, and they're more driven by the popularity or the namesake of the project more so than like any intrinsic value behind behind the token itself, like cash flow or profit. It was the word I was trying to get out. So if you're not really associating profit with the token or cash flow from the profit of the protocol, it's kind of hard to evaluate that token, right? So like for us at Harvest Finance, that's why we think the farm token is so powerful, because it actually receives 30% of revenue from all profits generated by the protocol, right? So if we have $100 million, to churning throughout Harvest Finance, and that's generating $3 million a year or whatever, well, we're getting roughly $1 million out of that, or whatever it is, right? So it's not a fee charged to the user. If you put in $100,000, you're always going to take out $100,000. We do not charge any fees on the base deposit. It's like a performance fee, right? So 30% of that flows to all stakers of the farm token. So you can immediately see, you can do like a P&E evaluation like you would do in a stock market on the farm token, because you can see, like on the front page, we show you how much deposits there, how much that's churning out, like on a monthly basis and an annual basis. So you just do a quick P&E and you can say, okay, this is what theoretically farm should be worth if I was doing that kind of evaluation. As I was kind of alluding to with like 95% of other tokens. And I say that as a random percentage just to say the vast majority of tokens can't really do a P&E evaluation on them, because they're not sending you like a cash flow. They may be sending you more emitted tokens, but emitted tokens are just like a printing press, right? They have no, like, again, intrinsic value behind them. So that's what I think is very cool and unique about farm itself. You mentioned the grain token, and you kind of talked about it, why we were in the news maybe about a year ago. About 3 months into Harvest Life, we were flash attacked, or a hack on the protocol. Basically, like one line in the code, there was I think it was like get virtual price versus another type of price call, which allowed a flash attack to basically trick the pricing of our assets and the derivative. So like I think it was USDT. Somebody was able to trick the price of the FUSDT, which is the voucher that we issued, and it resulted like they were able to borrow money in what's called a flash loan to attack us, manipulate the prices, and then extract, I think it was like $27 million of funds out of our vaults. To recoup all the victims of that, we basically issued the grain token, which is like an IOU token that we've been buying back off the market, right? As we continuously buy back and burn the token and get rid of it, it should revert to its like $1 peg. But because like people essentially just wanted to recoup money as soon as possible and just move on or do whatever they wanted to do, you kind of have your current market price of grain right now. To kind of like step back a little bit to $22 million or $27 million. I can't remember the exact figure off the top of my head. Obviously is a big, large amount of money. But it was actually equated to about like 17% maximum impact to any specific depositor's dollar amount, right? So yes, while it is a lot, and I will never make any excuses, like 17% is almost like a bad day in the market, right? So, not to put any humor on that, just like to kind of give it perspective and, what we were trying to accomplish with the grain token and really just make sure people were recouped. We've patched that up. We've had audits since then. We haven't had an issue now 9 months later of rolling out numerous new vaults. I think like probably over 100 new vaults, since that point. So I think we've shown a really great track record in that respect. The farm token's been issuing profits to all holders and stakers, since that point. So yeah, I think having celebrated like our 1-year anniversary in August, just really proved our staying power. We could have folded up shop, or the core non-devs could have folded up shop and said that really sucked. People hate us, let's move on. But they really decided to stick with it and really wanted to repay everybody. And I think we just have just a really great product because of that today.
Well, it is pretty admirable to see y'all still at it, to be completely honest. Yeah, that number is pretty scary, but when you start to break it down on how the protocol actually, works and who is actually impacted there, yeah, it's a little bit less than, that kind of big figure all at once there at the beginning. And I don't think it was just y'all last October, because I know there were a couple of other big, not just flash loans, but also attacks on protocols, stable coins. They're trying to push them up and down. It just shows you the activity in the area and in some of these yield farms. How do you go about, I guess, making, because there are so many illegitimate kind of actors in the space, how do you go about making everything, more enticing for the average kind of layman who's kind of, well, I got a couple of Doge now, what do I do?
It's a great question, because like, unfortunately the media never focuses like on the middle road where like all the good stuff and like progressive stuff is happening. It's either like, this dude made $20 million flipping NFTs. This dude lost his house and like, the roof over his head for his kids. And, and it's like, there's all this really good stuff that's actually happening in DeFi. There's places that are offering, solid, real sustainable APYs, whether, it's like Complify or it's Curve Finance, or Harvest Finance being an aggregator of like all these other different products. There are like cool things that you can do safely within DeFi. We just have to educate people. But unfortunately, because of like the psychological and like almost lemming effect of like the moon crowd in here and wanting to be that next multi-millionaire NFT guy, people just rush into these things and chase these percentages. And unfortunately, there's always going to be these bad actors that are taking advantage of that, right? So like for us specifically, like at Harvest, we really try to do like these educational efforts, like, Reimagine. Myself, I'm going to be speaking at Decentral Miami at the end of this month, beginning of December. Just more about educating. Like, I'm not even necessarily talking about Harvest per se. I'm more focusing on like the DAO aspects of Harvest. Like me, I'm literally like a nobody. Like, I showed up Harvest like week 1. I'm like, oh cool, yield farm aggregator. I'm not a core dev. Those guys are fully unon. And I just started hanging out. And every other community manager that we have in there, all the yeomen, the guys that help us bring strategy and engage with new projects that are starting up, we're all just community members. I think we actually represent like one of like one of the projects that are actually trying to be like what the spirit of a DAO is, right? Like a bunch of people running like the day-to-day operations and making all these decisions. And the core devs have completely let go of that to us, whereas they are just trying to more concerned about the code and the security and things get deployed appropriately, right? So everything that leads up to that, making deals, education, doing all these things, like that's what we're really trying to expand on and grow community and do the educational part of that. And like that's what we're like very passionate about, in addition to like, hey, here's this really simple protocol that anybody can use and deposit into. So it's just, to me, it's really about education, steering people in the right way, and not necessarily like when Mark Cuban's saying he's getting into Titan, I'm like, man, you're killing me with that stuff, because look what happened. Then you eventually got rug pulled because you jumped into it because of like some stupid APYs. There were so many other projects this dude could have gotten into, but that's what you educated the public with, and there's so many other coins that you could be accepting other than Dogecoin too, bro. Like, come on.
I really wish you would talk a little bit more about his Ave exposure. Yeah, I really would.
Yeah, exactly. Ave, like that's such a powerful protocol, and like it's so many things that you can do with it. There's just so many other cutting edge things that are coming out. Like I mentioned Complify, like a derivatives AMM that's like fully on chain, fully decentralized, with all this stuff in the news, like Coinbase is getting attacked because they have a derivative USDC, and Binance, you can't do leverage, in certain countries there. Whereas now you have like this fully decentralized, like easy to use as Uniswap. I want to 5x some Ethereum, click, 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 boom, you're done. And now I'm 5x, all positions fully collateralized. So there's no margin calls, no forced liquidations. You've cut out all the bad stuff about leverage. It's all DeFi, all on chain. It's an amazing product that people like on Wall Street would probably want to use, because now you can actually do trustless derivatives without some centralized exchange flash crashing you like happened on Binance USA and wrecks all these people. That would never happen on an AMM like this. But yes, let's go talk about Titan. Like I just, that's the kind of annoying stuff that really gets me. And that, going back to your original question, if celebrity knuckleheads are going to talk about stuff like that instead of like the cool stuff that's being built, like, Complify, APY, and Ave, all these amazing things, like you're always going to have these people falling into these scams, and that's really unfortunate.
Oh, definitely. I think people just assume that you start talking about these things and people's eyes will glaze over, but people's eyes don't really glaze over that much when you're talking about numbers like this. And so maybe you could talk a little bit more about what got you involved in the project in the beginning, because that's something that we did want to talk about here, is the DAOs. And the DAOs have been gaining more and more attention, and I think people, maybe even just with a little bit of exposure to the space, have heard the word, but maybe they're not sure or are skeptical, because they've been burned before by a community structure like that. So maybe you can talk about your experience there and, why you're so excited about it.
Yeah, I think it's hard because, there are like pretender DAOs, or there's projects that call themselves decentralized. I actually wrote a really cool article about this with some links. Maybe I can send you that. You can post with this on the conference. But I can't remember her name, the SEC lady, Hester or something like that. Her name is just off the top of my head. But she was actually talking about this. Like there's these projects that say, hey, they're DeFi, they're decentralized, but it's like the same 5 founding devs making all the decisions. And then like the token holders, it's really like 2 or 3 whales that come in and vote and then override everything, right? So is that really decentralized? And I think that's some of people's experience when they hear DAO, or, these pretender DAOs, or, they get scammed by some token or whatever it is. And that was kind of my experience. I've been sitting and doing this like 4 or 5 years now, sat on a lot of projects that have pretended they really want this community orientation. They do all the smoke and mirrors advertising, but they're in no way really decentralized. They're really just these hyper-centralized organizations using decentralized terms, right? And so, it's just very important. Like I keep talking about, it's just education, and people really understanding what they're getting into. Like what aspect of this protocol that they're engaging with is a DAO? Is it simply just a voting mechanism? Well, like DAO, the word decentralized autonomous organization, speaks to more than just a voting mechanism, an organization implies like, well, the entire business should be decentralized, right? So who's doing the marketing? Like who's doing payroll or HR? Who's doing the educational stuff? Is it, again, those same five guys doing all those and making all of those calls? And again, you're not a DAO. And so I think that's, again, going back to like Harvest Finance, all of that stuff is done by community members, that is controlled and managed by community members. Again, I'm a community member. I'm just some dude that they trust to come out, not be a knucklehead on this stream, right? And it's really cool to see that. And so people like when I try to talk to people like in the real world who have nothing to do with crypto, I think a great example almost of this is like Uber, in a sense, like how you have like this central protocol, but everybody working around it has almost made it like this pseudo decentralized, because you just have these networks of randoms driving around cars, and you kind of have this element of trust that they're going to do what they're going to do, and the really only interaction they have is this like centralized app that like helps you kind of get there and manages money and does that kind of stuff. But otherwise you have this decentralized network of drivers, in a sense, right? And that's kind of how I try to relate it to people in the crypto. Crypto just takes it to like a whole nother level where the protocol or that app that you're engaging with itself is also decentralized. It's trustless because it's running on the blockchain. You can see 100% of what that code is supposed to do. And if there's anything irregular with that, you can call that immediately, as opposed to like the Uber app. You have no idea what's going on back there. They fully control it. They control all the rules and rights. So, that's the kind of difference is when you get into crypto, it's supposed to be like fully transparent. Without that central organization controlling everything.
Yeah, and I saw on the Harvest website too that I guess to continue your metaphor there with the Uber drivers, if you wanted to make Uber a DAO, right, the Uber drivers would just be a single class, and then maybe the people who are building the app, the communications platform or whatever, they're a different class. And I saw on the website that you have D&D classes for different community
Okay. Yeah. Our worker roles.
stuff.
Yes.
Mm-hmm.
Yeah. So our class, yes, our worker roles. Yeah. And I was kind of talking about this earlier. So like I'm a foreman, right? And we have yeomen. Yeomen are the strategists who go out and say like, oh, I saw this project launching. They have a token. I think we could run an LP vault for them. I'm going to reach out and have a conversation with them and see if they're interested in explain Harvest to them. And, and they may bring these deals and these new collaborations we never heard of, or even pre-seed investments. We do that through a venture called Council 69, where we actually invest like $50,000 into projects. We want to collaborate with them, maybe help them build a vault or do some kind of strategies, whatever their specific project is doing. And we've done like 5 of those so far to really great success. Just through those worker roles, again, it's more engaging with the community, making sure the organization part of the DAO is truly decentralized and bringing more people on. It's not like this job interview structure. It's, oh, you want to be part of the DAO? Here's a shovel. Pick up and get to work, right? And let's see where you fit in. I think that's a really critical aspect to like what we're doing here. And other projects, follow suit with that. But at the same time, like you just have to, like I said, just educate yourself on what you're getting into and what you're participating in, because a lot of people talk like a big game, right? But it's very important to kind of be able to see what's behind what they're doing, what's actually operating. And I think like you were saying with like the Uber example, yeah, they may be like a different class or a different role, but you're all still part of that like same network, right? Like at Harvest, we do have like a builders class. So maybe they would build the decentralized Uber app. They would simply write the code and it says go, and it's running live on the internet by itself, and it requires any other interaction. I'm sorry about the bad grammar there. No other interaction. But if it does, when the code is being uploaded, people can kind of see what's going to happen beforehand. Like at Harvest, any changes to our vaults, there's a 12-hour delay. So if the devs were to say drain all money, and sent that command in, there's a 12-hour notification period that people would be like, whoa, what are you guys doing, right? So again, that kind of helps with the decentralized nature of like, people just can't do these random things that would wrecking ball what you're doing, right? And some of those things may also need to be voted on for implementation. So yeah, you can still have these people building an app, let it go free on the internet, and now drivers can randomly connect to it and, you know, do whatever they need to do. And yeah, you could have a fully decentralized Uber in that sense, although we still have to work out like the trust part with your drivers and KYC. And, you know, there's some other nuances there to work out, but ultimately, yes, there is a possible way to decentralize like that kind of application.
Yeah, I was just continuing the metaphor there, and that's the autonomous part of that the D, the A, and then the O there as well, is that something's autonomous is just continuously happening even without any input, and nothing can happen without any input too. But if it's already set up, it's going. So I guess in a sense, does Harvest need actual interaction? Probably to farm the vaults still. Or is that happening?
So the main part is deploying new vaults, but Harvest is actually working on decentralizing this methodology, implementing like a new SDK system, where like somebody could actually kind of reskin Harvest Finance, interact with all of our vaults, and then maybe even offer vaults of their own. So we're working towards that. The problem with that is security. Somebody could reskin and say, hey, we're Harvest Finance 3.0, but it's pointing all their money to their own wallet or something like that, right? And so that's kind of the challenge with any of this, right? Because I know like even Ave, they want to decentralize their front end, but like makes me wonder, like somebody could say, how do you validate that? Or, there's a lot of trust there to say like, oh yeah, this works correctly, right? Unless like Aave is going to check mark it off itself, but then that becomes like a centralized process if you're relying on somebody else to validate. So it's just like this really weird thing of like, how do we cut out that risk? To me, I think it's almost better again to have this pseudo decentralization where there is a trusted party, but their main trust is like, again, security, while all other operations, like those day-to-day operations that are happening at Harvest, are community driven, right? So we're making all the decisions in the sense, we roll up an ask to them, say, hey, can you deploy this new vault? We think this is a great idea. Sure, let us do security checks. Boom, it's done. That's all community decentralized decided. Implementation is just done centrally for security purposes. And to me, that's the best of both worlds.
And yeah, right now, I think that's the best that we've got, really. I've talked to some people that say that in order to get to that true decentralization, that we're going to have to invent new cryptography. And there are people already working on that, too. It's just I think, I need, that's above my pay grade. I don't know about you.
Yeah, I know. But, it's just, again, I rather not pretend we're fully decentralized or like give all these, false promises and just say like, look, we're doing the best we can. And I think we've achieved the spirit of like what a DAO can be with a protocol that's, managing $500 million safely. Right.
Mm-hmm. So let's go ahead and move over. I do agree 100%. But branching off from the DAOs, since that kind of touches the real world a little bit, since we're talking about individuals cooperating, the traditional way that that's done in the real world is in a governmental type structure. And the government of El Salvador recently adopted Bitcoin as legal tender, and the IMF directly after labeled cryptoization a threat to the global economy. What are some of your thoughts on that? I'm sure you're very opinionated on those machinations.
I don't know. It's hard because, there's obviously a lot of opinions on this. Did they roll out the appropriate infrastructure to say like, oh, here's a global currency right now? Here's all the education on this. This is how, here you get a wallet. This is how you pay, interact, So it sounds cool to like us degens, like, oh, country adopt this, whatever. But there's just so many other things that have to happen beneath that for that to truly be successful, right? And then what does that do to like the currency that people are holding of the native fiat currency there, right? Like I haven't like truly too deeply dug into it, but like those are like my immediate concerns. And then, yeah, then you have other countries that are like always so negative and antagonistic towards like crypto, like China, who always seems to be flip-flopping and have banned it 37 times, so, to me, it's just hard to say. And it's almost like irrelevant, right? Like I think when like Satoshi was probably building Bitcoin, it wasn't like necessarily let's get government acceptance of this. No, it was like we need to make a system that who cares whether the governments take this or not, right? So yeah, it's cool that like there's getting recognition from these government spaces and almost like the acknowledgement like, wow, Bitcoin or Ethereum has come like so far and they are following these decentralized principles. We almost can't stop it. So maybe we need to adopt it. But like ultimately, I think there's a lot of maturation that needs to be done, like with the interfaces of like Ethereum, that if Aunt Matilda is clicking send on some money, it doesn't get sent into a black hole because she left the last digit off of the wallet or whatever, right? Like that's just not a system that's sustainable right now. And to imagine a whole country trying to do that on Bitcoin, that's uneducated, like that seems sketchy to me, right? So again, so it sounds really cool that governments are taking this on, but that wasn't really the point crypto was started, it seemed like, in the first place, right? The governments were supposed to be irrelevant in that regard.
Yeah, Nakamoto, I believe, in some of those first, the white paper, it's a direct, kind of come and get it to the banks there, because I believe there was some stuff about, hey, they're going to bail out the banks again, or the Times headline or something or other. It does seem like simply giving a wallet and saying, hey, have at it. It is a recipe for, unrest, confusion. Who knows? But that's been the tactic down in those parts of the world for a long time too. So I think here in America, I mean, it's not here in America, but where I live, I know it's kind of hard to tell, but the big threat that we hear about in the media is NFTs, right? NFTs are gonna blow up, and it's all about generative art, right? Do you think that generative art has a long lifespan? And what do you see as the future of NFTs? And how does Harvest Finance interact with NFTs in any way?
This is other like super nuanced conversation. Because like I think NFTs like can be very powerful, like just a non-fungible token. Like your house could be created into an NFT, digitized in a sense, and then you could sell it. Like title of your house could be put into an NFT, and that could be on a blockchain. It could be immutable, digitized, easier to track. You could create this whole system that's a lot easier than trying to chase down files of pieces of paper at some random local county assessor's office, right? Amazing use case for NFTs, or fractionalizing pieces of art could even be really cool and something that's being kicked around, right? Like not everybody can afford $1 million, Mona Lisa, Picasso, whatever it is, right? But if you fractionalize it, right, and tokenize it and make this system that's super easy to use, and again, not having to chase around a piece of a stock paper saying, hey, I own this, right? A great just use case, NFTs, gaming, right? Like all this CSGO skins that you could put on your gun that are worth trillions of dollars, blah, 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 blah. Like all that stuff, tokenized and made to be easily traded in a decentralized fashion instead of having to rely on just Steam or, whatever platform you happen to be using, right? So there are all these really, really cool use cases for NFTs. And you've seen this huge explosion also in the art world because like artists who may have never been seen before can put their art up digitally. And it can still have like the provenance that you would have in whether it's like a piece of art hanging on your wall, right? And now, again, you can have it to this whole wide world of people that have never seen it before, right? And so you're kind of having this explosion. But what's happening, just like the rest of crypto and the Wild West stuff, is it's being exploited to, you kind of have like this, what's called PFP, profile pictures, where you can almost like, I think the good metaphors like baseball cards. You go out and buy a pack of baseball cards. There's 20 of them in there, and likely all 20 of them might be junk, right? But maybe if you buy 10 packs, you'll get like one semi-rare one, or if you're super lucky, you'll get really rare one, the Michael Jordan of cards, whatever. And that's almost what like these NFTs have come into, is like, oh, here's a picture of a lion. I'll make 10,000 variations of this lion with different color backgrounds, a hat or a cigarette in his mouth or whatever. And maybe 10 out of those 10,000 will have any kind of value because people see value in it being the one of having that specific trait, the lion with lasers coming out of his mouth and whatever, and a cigarette in his mouth or whatever, right? And that's kind of what's happening, is now all these like pop-up projects and people are just jumping from project to project hoping they get that one diamond in the rough, and it's kind of like become just this mess in the NFT space, which is actually like overwhelming the Ethereum network, where the ETH gas prices are raging because everybody's trying to launch this project and kind of get their $1 million out of a bunch of people that are scrambling over themselves to buy these baseball card packs or whatever, right? So again, like NFT space could be really cool and is really cool for all of these artists that are really, truly generating really cool stuff. Generative art, I think, is actually very cool. Like Artblocks.io got me really interested in stuff. I don't know if you ever played the game No Man's Sky, like procedural generation, just thinking, man, I'm playing a video game and I can go to like a planet that nobody's ever seen before and could never be created again because it's using a randomized algorithm that would, in all probability, could never be come up with again just based on all the choices of the algorithm. And that's exactly what's happening with generative art, right? Like these artists build programming and they give it all these attributes and they can hit go and it can make, a million different variations of something, but they only print 10,000 of them. So all 10,000 of those pieces are going to be extremely, extremely unique and could be completely different looking from one of the other ones. And that, in a sense, is what gives it its value. Again, a lot of it's eye of the beholder kind of stuff. I've seen some very chunky generative art. Again, that's to me. And I've seen some other stuff that's been really amazing too, right? So I definitely think there is a lot of possibilities and cool stuff out of NFTs. But I think, unfortunately, the exploitation of the environment is like kind of overwhelming things. And then, like, as I said at the beginning, the media loves to show you the extremities. Oh, this rock sold for $3 million. And that's the one that's scratching my head. I can't understand why somebody's paying for a JPEG rock. I can understand why maybe somebody's paying, something for these generative arts because they think, hey, this artist made something beautiful, and I think he's the next Rembrandt of our generation or the next Banksy or whatever you want to call it. Okay, I can appreciate that. But a rock? That's the one that's tough for me to swallow, even if you're going to say, well, I'll be the first person to own this rock when NFTs were first kicking off. So in 20 years from now, people will know I'm here at the beginning. I'm like, and you paid $3 million for that status? It's like, to me, that's the stuff that's just wild, right? So I don't want to offend any of you rock holders out there. That's just, old man yelling at the sky. I don't get the rock thing, but I do definitely get why NFTs can definitely have value and can be very cool.
Yeah, I think also in this new kind of the information age that we live in, there's a shattering of that kind of mass media of everybody doing the same thing, everybody liking the same thing. Hey, we're all going to go out and buy Beanie Babies, and we're all going to go out and buy Pokemon cards. And now you're kind of seeing everybody do their own little thing. And some of it I understand. I'm with you. Some of it I understand. Some of it I don't. And then when I'm doing my reading too, it's like, well, some of these people don't understand this either. And I'm not talking about the NFT guys that are trading the rocks. Y'all understand it a lot better than both of us. I'm reading and I'm going, they just said it swapped wallets. So it looks like somebody out there, just wanted to make a headline, because it's how easy is it just to spin up another MetaMask wallet and spend, I wanted to spend $150 in gas fees to make a headline.
Yeah.
So
yep, some people think it's like I've seen in chat rooms, people think it's like some kind of form of money laundering. That it's probably just a handful of people that kind of just cycle through these big ones. Because I talk to my friends that aren't in crypto, and they're just like, somebody paid $5 million for an Atari head. Like, I got my Atari in the garage. Like, why isn't that worth millions, right? Like, it just they're just so weird, right?
Yeah, when in reality, you never know that it could just be some, that's not really $5 million to him. He's been amassing ETH since, 2012 or whenever, ETH came on the scene. And it's,
Yeah, that's true. And
so
that's pennies to him. Yeah, yeah.
exactly, yeah. So it's eye of the beholder type stuff, and it's very, very exciting because I always had that question as a kid was, if I wanted to, because you see it in old movies, they have literal physical stock. And if I wanted to go get my actual stock, how am I going to do that? I, I don't know. But if with NFTs, that is actually possible. And I am the kind of person that I don't trust like that. You know what I mean? I would prefer to have it right here with me.
Yeah.
So anyway,
Yeah.
so,
No, yeah.
oh, no, go right ahead. Go
Yeah,
right
no,
ahead.
no, yeah, no. I was just going to say the same thing. I just think the fact that you can have direct ownership of things is what makes crypto so exciting. That I'm not having to use, some E-Trade or something. Like I'm in full control of my assets. Like, and when I do go make a buy like that, it's really in my possession. I have all these choices to make. Right. Obviously, there's some risk to it because now there's nobody I can call if I lose it all. Right. But at the same time, I think that's what's so appealing to many people is just that financial power, and NFTs are empowering people like artists, right? People making games. There's just like this huge economy that's forming out of it. That is very positive and it is very cool. We just need to appropriately educate people, right? Because the media is not doing it, right? They're just showing you like the high end and the low end, and we really need to show people what the middle road is.
Oh yeah, definitely. Because and getting back to those skins that you were talking about earlier in the video games, those are already tokenized assets because they have unique identifiers for each one of them. It's just centralized, right?
Mm-hmm.
So
Yep.
branching that out could bring a real, you take Steam out of the equation, right?
Nope.
All right, sir. Well, we're gonna go ahead and wrap it up. Thank you for coming on out. Is there anything else you'd like to say to people before we go about Harvest or yourself or anything?
No, I would just love for anybody to come out if you're interested in, whether it's, hey, I want a high performance kind of savings account kind of thing, right? I think Harvest is kind of one of the safer, more intuitive ways to kind of jump into DeFi with kind of a lower risk profile. Or if you're interested in getting into DAOs and like, hey, I want to grab a shovel and get to work, and I'd love to learn more about this. Please just come. We have a Discord chat, very friendly people there. We love volunteers or people looking to actually take on a paying role. I mean, there's so many things that we have to offer. Artists, marketing, people doing risks, people that love to do networking, like literally, like we almost have everything for every skill set. So it would just be great. We would love to have anybody out. Come check us out, harvest.finance, all the links there for like our Discord, Telegram, all that cool stuff.
Awesome. Well, thank you so much. That was Red for Harvest Finance, a yield farm aggregator looking for community engagement, and they've shored themselves up since that flash loan attack they suffered last year. So sounds like a good day. Have a good one, Red.
Appreciate it. Thank you for having me.